We have had aggressive tightening from Sanusi to date, 275 basis point hike from the 6% we had in September last year to the current 8.75%. As I said, we've got inflation stable under 10% at this stage. What are all the factors that you see the MPC having to weigh up today when it comes to choosing whether to halt the tightening cycle or continue it?
Thank you very much. Good morning, and thank you for having me today. I think the CBN has stated clearly the objective for this year, at least in the short term, maintaining price stability, both in the foreign exchange and in general inflation in the economy. At the moment, it appears that the Central Bank has gotten it right in terms of maintaining single-digit inflation. The foreign exchange rate has remained within the band of 3%, which they have set for this year and for the short term, although there are a lot of pressures on that angle. But I think in taking decision now, between today and tomorrow, they will look at what may likely happen towards the end of the year. Our views are that we think that inflation will remain in single digit this month. After this month, we think a lot of pressures will set in place again that may make inflation to go in the region of 12%, that's double digit to end the year. But that being said, we think the Central Bank may likely have take a hold decision in terms of their policy rates between today and tomorrow. They may still embark on additional tightening, but not necessarily hiking rates. We think they can use open market operations to, mop up temporary liquidity in the system.
Now, Sanusi has also cited the stalling global growth as a big concern going forward. If we look at the Q2 number that came through for GDP in Nigeria, 7.72%, the economy is still steaming ahead when you look at growth versus the developed world. Do you think that this also adds further evidence that we could have a halt in the tightening cycle at this stage, given the concerns around global growth?
Yeah, if you look at Nigerian situation, as we speak, the figure that Nigerian Bureau of Statistics released to us last week shows that agriculture still dominates the economy. Agriculture accounts for about 42% of the GDP in Nigeria, followed by wholesales and trade, and there's retail trade, which account for about 16%. Agriculture is growing about 5%. So it's a sticky sector which may not necessarily move in line, that's agriculture in line with the global trend. It takes a very long time for it to feel the heat of decline in line with the global trade. And again, in the last few quarters, Nigeria has actually recorded huge harvest from agricultural products. So it is not. So we think that Nigerian growth rate may not move in line with what we have in the US, in the UK, and other regions where it appears they are going into recession at the moment. So that growth is actually fueled by non-oil growth, which grew by about over 8% as at half year. So we think that it will not necessarily move in line with the global trend that we have because of the fact that it's dominated by agriculture.
Ayodele, but what about, as you say, there's a lag effect there, but what about also the fiscal deficits that Sanusi highlighted in July as a concern going forward? We do have the new finance minister who's vowed to rein in a government spend, also targeting a deficit now of 3%, but that will take some time to feed through. We haven't got that new 2012 budget. In the medium term, are Sanusi's deficit fears do they still stand?
No, I think the finance minister has made it clear to everybody that there is a need for Nigeria to actually limit the fiscal deficit to about 3%, which I think is what we agreed in about 2007 within the Fiscal Responsibility Act that was signed in 2007. That's very good, and it will that will go a long way to control the spending of the federal government and to limit the rate at which they borrow money from the domestic market, so that not to crowd out the private sector out of the market. That's very good. But we have actually mentioned one of the things that she has said she will do now is to block all leakages in government spending. Yeah. Vis-a-vis, as we speak, we have a lot of ghost workers that they are paying money to, but they are not actually that just go to work, ghost workers. They are not human beings there. So these are the areas that the finance minister is going to block. And we think she will be able to do that because she was here before, and then her achievement actually stands for her.
Let's take our attention back to the equity market, because of course we will be getting that decision from Sanusi later on in the day. Ayodele, can you just give us your stock picks for the week? Of course, we've seen the market under considerable pressure, down 15% now year to date. Many analysts saying we still expect further free fall, but of course there should be value in the market at this stage. Where would you be putting your money?
Yeah, as we speak, like you said earlier, the market has dropped close to about 16% year to date this year. Our view is that the market is close to the bottom. Anytime from now, we may see recovery, looking at what the economy is doing and what the other regulators, the Nigerian Stock Exchange and the Securities and Exchange Commission are doing. We think that the market may likely recover very shortly. How soon, we don't know. But in terms of where specific stock that investors can be investing now, we think Nigerian breweries has very good values. They have embarked on a couple of expansion in the last couple of quarters, and we should begin to see the positive impact of that one on their earnings towards the end of the year. GTB has very good prospect at the current price, about 12 naira. The dividend yield is very good. This company usually pays 1 naira at the end of the year. So if you look at the dividend yield of that on 12 naira, I think it's a decent one. First Bank has value as 10 naira 60 kobo. We think is a good one. Going back again to food and beverages, we think that Nestle, that is just like an income stock, pays a lot of dividend out, generous dividend payment. I think these are stocks that we think we should be recommending to our investors at the moment.